Good morning, welcome to CATEX TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Monday, September 29th, 2008. It's 11:30 a.m. Eastern Daylight Time in the U.S., also 11:30 a.m. down in Orlando, Florida. We have a special viewer there watching today. In London, it's 4:30 p.m. In Mexico City, it's 9:30 a.m. If you need to reach us during the broadcast, phone in toll-free at 1-866-67-CATEX. Overseas, our AOL Instant Mail address is CATEX-TV. On this day in history, in 1982, extra-strength Tylenol capsules laced with cyanide caused their first of 7 deaths in the Chicago, Illinois area, in a case that remains unsolved to this day. Now we'll go to our news, and the first news is an update on the economic developments in the United States. Yesterday, late afternoon, news began to circulate interrupting the American football games that the House of Representatives and the Senate had come to an agreement with the Treasury Department on the economic bailout bill. This morning at 7:30 a.m., President Bush appeared in a live television statement in front of the White House announcing that an agreement has been reached and urged everybody to move as expeditiously as possible to sign it. About 2 hours ago, the U.S. House of Representatives began debate on the bill, and it's hoped that the bill might pass the House sometime late tonight or early tomorrow morning. The stock market is not responding well. It's down about 280 points now at about 11:30 a.m. Eastern Daylight Time, so we'll keep our eyes on that. There's some other news involved in this issue. Citigroup has agreed to buy Wachovia in a deal that was brokered by the Federal Deposit Insurance Corporation to try to avoid another major corporate failure in the middle of the financial crisis. Wachovia is the United States' 4th largest bank. The FDIC announced the deal on its website this morning. No price for the transaction was included in the announcement. However, the FDIC said that the deal hinged on a loss-sharing arrangement between Citigroup and the FDIC. Wachovia had been saddled by mortgage-related losses. Partial nationalization by Benelux nations of Fortis, a financial group, occurred over the weekend. Apparently what occurred is late Sunday, the Belgian, Dutch, and Luxembourg governments came to the rescue of Fortis with an 11.2 billion euro bailout to keep the financial crisis from claiming another victim in Europe. Under the hastily arranged rescue, Belgium will make the biggest contribution, taking a 49% stake in the Belgian arm of the company, Fortis Bank, for about 4.7 billion euros. The Dutch government will take a 49% stake in the Dutch arm, Fortis Bank Nederland Holding, for about 4 billion euros. And Luxembourg will buy a 49% stake in Fortis Bank Luxembourg for 2.5 billion euros. According to the Belgian finance minister, our ambition is clearly not to remain present as stockholders. So hopefully that'll be temporary, at least in their view. In the midst of all this, the French President Nicolas Sarkozy announced that tomorrow morning at 8:30 a.m., he's going to be meeting with the heads of French banks and French insurers, as well as the French Finance Minister Christine Lagarde and the Bank of France Governor Christian Noyer to discuss the financial crisis. Sarkozy's office said in a statement that the names of the persons attending the meeting are still unknown, other than the ones I just gave you. And we have some indications now as to the fire sale prices that Mr. Liddy at AIG is going to be charging for the sale of some of their assets. A London paper, the Sunday Telegraph, reported yesterday that AIG has agreed to sell part of its minority interest in London's City Airport to its joint venture partner. AIG will apparently sell a 25% stake in the airport, which is the fastest growing airport in England, for about £250 million to Global Infrastructure Partners. Global Infrastructure is an investment fund whose shareholders are Credit Suisse and General Electric. Global Infrastructure Partners and AIG paid just under £750 million for the airport in December of 2006. Since then, passenger numbers have soared and profits have almost doubled. AIG, City Airport, and Global Infrastructure have all declined to comment. Now, just trying to connect the dots here, if AIG is selling a 25% stake for £250 million, and the total purchase price was £750 million in 2006, and the value of the airport has gone up dramatically, Perhaps it is a pretty good deal, actually. I did my math wrong originally. And in Tokyo, apparently there's a roadshow going on with the Munich Re executives. They're briefing Japanese investors. The Japanese newspapers came out this morning with this story. Germany's Munich Re said that its financial products designed to cover natural disasters, i.e. cat bonds, are popular, and they remain popular during this current huge financial crisis. Global financial turmoil triggered by the subprime mortgage crisis has not damaged demand for cat bonds. This is according to Nicholas von Baumhard, who's the chairman of Munich Re. He says the reason is because their risk is not correlated to that of other securitized products. He went on to say the risk is still quite welcome by asset managers. He added that the company, Munich Re, has recently securitized earthquake insurance risks in Japan. Munich Re briefed the Tokyo investors on its strategy on new markets, including covers for renewable energies and covers on planned delivery of carbon credits from green projects in developing countries. When von Baumhard was asked about the impact of recent financial turmoil following the rescue of AIG, he said, in fact, it would provide opportunities to us. He said, we at Munich Re are among the most conservatively invested companies, therefore we're little affected. After the presentation, he told Reuters at the sidelines that, in fact, Munich Re is interested in buying Asian and Eastern European assets of AIG, depending on the price. When he was asked directly if Munich Re is interested in AIG's reinsurance business, Transatlantic Re, von Baumhard said, no, not at all. Boston-based cat modeling firm Applied Insurance Research said this morning that it estimates that insured losses to onshore properties in China from Typhoon Hagupit will be between 100 and 250 million U.S. AIR said that high winds and flooding caused by Hagupit affected about 9 million residents and about 1 million acres of crops. The firm said that China's Ministry of Civil Affairs reported that the storm destroyed 28,000 buildings and caused economic losses of nearly 2 billion U.S. Hagupit was characterized as the worst storm to hit China's Guangdong province in more than a decade. Hagupit also triggered a reported once-in-a-century storm tide in which water levels rose 2 feet and more above normal in severe coastal cities, including Guangzhou, Foshan, and Yangjiang. The stock market is down about 270 points as we go to a word from our sponsors.
Every day, the world wakes up and goes to work, pursuing the unique opportunities that lead the global economy forward. The complexity and close connectivity of today's global marketplace is a true modern miracle that can create unparalleled success. But it takes confidence, passion, innovation, and understanding.
Enabling opportunity. Protecting capital.
Engineering innovation.
Investing in your future.
Ensuring continuity.
Finding the right balance.
It takes Aon.
From prehistoric time to today, man's progress has been marked by his ability to fashion tools and use them to his advantage. From early humans making tools from stone, man evolved and was soon trading with other men. Money evolved, and tools such as the abacus to handle complex money transactions were developed. By the end of the 19th century, machines such as the cash register began to appear. 100 years later, we have even better computer-driven machines which track stock, change prices, and automatically reorder. Meanwhile, the reinsurance industry has failed to embrace man's drive for progress. The reinsurance industry today would be as familiar to practitioners from the 1800s as it is to modern underwriters. An underwriter or broker from 1800 would settle nicely into today's business. That is, until now. For the reinsurance industry, pivot point changes everything. Soon it will be understood that the period before pivot point was as dark as the caveman period was before the abacus. Come and see for yourself if you don't believe. After a demonstration, you will understand what is possible.